A house can get more expensive even while fewer people can afford to buy it. It feels broken, but 2006 shows exactly how this works. Reuters reported that US single-family home prices edged up in March. At the same time, mortgage rates were still heavy, and inflation fears tied to the Iran war were adding pressure to borrowing costs. A mortgage rate is the price of borrowing money to buy a home. When that price rises, the same house can suddenly feel much more expensive. So why do prices not fall right away? Because housing does not move like a stock chart. It moves like a locked room. In 2006, the room started locking from both sides. Buyers were getting weaker, loans were getting harder, monthly payments were getting heavier. But many sellers still remembered yesterday's price and did not want to cut. That is how a market freezes. The buyer says, "I cannot pay that." The seller says, "I will not sell for less," and the house just sits there. Today's trigger is different. The pressure is coming from high mortgage rates, tight budgets, and worries that war-related inflation could keep borrowing costs higher for longer. But the machine is familiar. When money gets expensive, buyers slow down first. Prices often move later. That was the warning in 2006. The market did not begin with everyone agreeing prices were too high. It began with silence, fewer deals, more waiting, more listings sitting longer. The first crack was not always the price, it was the pause. And once enough people pause, confidence starts to leak out of the market. For regular people, this shows up in a simple way. A family wants a home, but the payment does not work. An investor wants a deal, but the numbers feel thin. A homeowner wants to sell, but does not want to give up an old low mortgage rate. So the market looks strange. Prices can edge up, affordability can get worse, and activity can still feel frozen. The lesson from 2006 is not that history repeats exactly. It is that housing can stall before it snaps. Sometimes the freeze is the warning. If you found this useful, follow for more forgotten finance stories. Does your local housing market feel active or just stuck? Tell me in the comments.